Hello, everybody. This is Guillaume Villon de Benveniste from the Innovation and Strategy blog. And today we're welcoming Christian Fife. We've talked with you multiple times. You told us about your experience as a CFO. And in our previous conversation, we talked about the different kinds of investors. And for those of you that watched the last show from the beginning to the end, you might have noticed that we were talking about hedge funds, and we decided to connect again to discuss hedge funds in more detail, as well as a bunch of other questions. So you were talking about Christian. Hi, sorry. Hello.
Hello. Thanks for having me again.
Yeah. You were talking about hedge funds, and you had talked about value investors and growth investors and how they're different from one another. And maybe you could tell us about hedge funds again, and then talk about activists, yet another kind of investors, as well as index investors. Would that be okay?
Sure, absolutely.
So can we start
Um,
with hedge funds?
yeah, so hedge funds are going to be part of investment firms, or they can be a completely separate, and wholly dedicated hedge fund. Um, and these are investor styles that are quite aggressive in their usual behavior, in terms of wanting to maximize on share price changes in short term. So for an investor relations officer in a company, at times they can be difficult to deal with, because they will not focus their questions on long term, but they will try to focus questions on whether there might be any potential big swings in within the next quarter. Because what their objective is really outperform market benchmarks. And to do so, they will try to really leverage any small piece of information they believe is relevant, to ensure that they get the most out of the swings that happen daily in the share price. So it is
So in a
usually a high
sense,
high risk, high reward. Yeah.
from a time frame perspective, you could say that they're the opposite of value investors or even growth investors who tend to invest for the longer term. Would you agree with that? From a purely time
Definitely,
frame perspective? Yep.
definitely. Now, I have experience with hedge funds that take big swings in positions within a quarter. They don't
Right.
all only look at such a short period of time, but definitely
And when
hedge
you say
funds.
big swings, just for people to understand, what does that mean? Like you mentioned that you're working for WebTech, and WebTech was a 9 billion market cap company. So what's a big swing for a hedge fund?
WebTech is WebTech. I've worked for both WebTech and WebCo. I used to be investor relations officer at WebCo, and that company's market cap was somewhere around 9 billion.
Okay.
WebTech is larger,
Okay.
and the market cap is probably around 18 billion,
Okay.
as of today. But in any event, so my experience goes back to WebCo Holdings, now part of ZF. The big swings are going to be whenever you have, um, what most of us have cell phones, right? And in some cases, if you have an iPhone, you've got the stock tracker that
Right.
you can see, right?
Exactly.
So you can see that in the last week, a certain share has
Right.
been constantly dropping, for example.
Right.
So what you're going to be needing to assess as a hedge fund, is you either are invested in the story, and then if you see things going down, you might want to decide that you're going to sell your position because you feel that um, things are going to move further south. Or you can say, I think it's going to rebound because I know that there's this specific piece of legislation that is coming out next week. So I'd rather buy now at a very low price and then expect that the
Right.
announcement that is going to be made by the regulator next week is going to bump the price back up,
Right.
right? So the size, whether it's a large swing, large is going to be dependent on what is your investment fund size.
Okay,
Really.
so all right, I get it. So it's not so much the size of the capital that is the number of shares that are being sold or purchased. It's more the variation in the shares value.
Yes,
Okay.
correct.
Okay, great. I get it. Perfect. So
Yeah.
can we go on to the activist, which is another type of investors?
Yeah. Now, activist is another type of investor, as you said, but really, I want to say this is not so much necessarily just a category. It's more like a behavior. So you can be, you can be a hedge fund, you can be, a large investment fund, but at some point, you might decide that you want to go in and influence the control of the company.
Okay.
That is the key change in behavior because in most cases, you'll find investors are really willing to invest in a company as long as the company has certain characteristics and as long as they can meet management. Okay.
Right.
Access to management is one of the key things that investors all look for. It's not just about looking at the financials. It's not just about looking at the bright PowerPoint slides. It's not just about some aspects to the story. Large investors usually want to have access to management so they can look at people in the eyes
Right.
and determine if they are trustworthy.
Yep, that makes sense.
That's,
So
yeah.
I'm getting that activists would tend to acquire a significant portion of the company's market cap if they want to uh, have some influence on management direction. Whereas hedge funds might not look to acquire a significant portion of a company's shares. Is that correct?
Almost. What I would say is an activist is not an investment style necessarily, like we talked
Yep.
about hedge funds or growth, but a hedge fund can become an activist.
Okay, I get it.
Okay, so it's more a behavior,
Right.
and what you'll have is you'll have large cap activists with familiar names in the market in the US like Carl Icahn
Right.
or Nelson Peltz. But in Europe, you have activists or companies and firms that are known as being activists, like the Bolloré Group or Petros Advisors or Servian in Scandinavia, and these are large, well-known names that have the known behavior of really wanting to, whenever they take a position, they will look forward to at some point influence control of the company.
Right.
Now,
And there was
depending
there was
on
a disconnect. There was a disconnect with the three names you mentioned. There was Bolloré in France. There was a
Petros,
Petros,
Petros Advisors,
Petros
Petros,
Advisors, and another company in
yeah,
Scandinavia.
Servian,
Servian. Okay.
yeah,
Okay, great. So, and then there's another investor kind, which is the index investors. And so these people
yeah.
are very different from all the others. Is that right?
They are. So what these index investors do, I want to say that with some levels of difference, index investors are less do take contact less frequently with the companies that they invest in. Because what they do is they really have a portfolio of stocks that mimic the composition and performance of financial market indices.
Right.
So their strategy is rather more passive than others. So
Right.
examples of indices, we can talk about the S&P 500, we'll talk about the CAC 40 in France, or the FTSE 100, the FTSE 500, but there's many more as well, because you're going to have indices that focus on a region, for example. Okay,
Right.
that
Exactly.
you're
Or
going
a
to have
sector.
indices that focus on a sector and things like that.
Exactly.
So, and that's where these companies are going to invest. So their portfolio, again, this is their activity in
Right.
replicating that composition of the
Right.
index,
Yeah.
and that's why it's a different type of engagement from a corporation that is listed with the index investors. You want to have them, so you're going to have Vanguards, you're going to have as a big one. But they do write at least once a year. They'll be writing to all the CEOs of the companies that they own,
Right.
and they will be asking for a set of changes to their governance, to a number of items. So they do have a less frequent interaction, but they will, however, at least once a year, write to you and say, this is what we really would like you to do.
Yeah.
So you have to take that letter seriously, because
Right. Right.
these
Right.
sometimes are very large funds, but
Yeah.
it's a different type of engagement.
Yeah. Yeah. So in a sense, you could say that the opposite of index investors from a valuation and value analysis perspective are the value investors that look at specific companies, whereas index investors look at a broad range of companies. Um, and uh, and also growth investors are also quite different from index investors in the way they analyze a specific company. So maybe we can go on to another question. Assume that you're regular Joe, or you're Monsieur Paul Dupont, and you're looking for publicly listed companies that seem to be failing in the eyes of investors. So, for example, you could even be myself. Like I don't know much about finance other than the conversation we're having today.
Mm-hmm.
How do I spot companies in all this ocean of information? You mentioned that there were $19 billion exchanged in the previous conversations on a daily basis in the New York Stock Exchange. How do I find the companies that are publicly listed, which in the eyes of investors aren't doing as well as they should? How do I find these people? How do I find these companies?
Okay. Um, that's a very interesting question. I think what I'm going to talk about now is going to give you a few clues that things are not working as well as they should. But each time, there's going to be a bit more deep work that is going to be required to really understand exactly what is going on. So these are just some signals. All right. Now, obviously, the first signal, the obvious one, is going to be the declining share price that you can see on your cell phone today with a big with a nice graph. So declining share price means different things. Either that the company has a problem, or the industry in which the company operates has a problem, or there is a general overarching macro issue. But again, this one is the first item that you can see, the declining share price. If the decline is the decline of share price could be technical for specific reasons, or there can be something more to it. But this is the first indication. Okay, that's one item. The other indicator that is also sometimes used to assess whether something is not, or let's say the company is failing in the eyes of investors, is going to be the publicly available information around sales of shares by key company executives.
Okay, so looking at, I'm sorry. So looking at publicly uh, publicly available information on shares that are being sold by management. Is that correct?
Yeah, absolutely.
Okay.
Because every time key management is selling shares, and key management is a list of individuals who are registered with the various national authorities as being the important ones running a company.
So these people would be the executive committee, or or
these could be these are going to be board members as well as executive committee or senior leadership teams. Yes.
okay, so board members and executive committee members. Okay, perfect.
Yeah.
And so where would one find that kind of information?
You will want to look at so this information. So we talk about the tools here. So we usually there's two types of tools that exist, and a third that I can't really speak to as of right now. But what you do have in the industry is you have a tool such as the NASDAQ IR Insight or a Bloomberg terminal. You know, Bloomberg just
Okay.
very much like the news outlet.
Yep.
And also there's a new one that I've come to know, but I can't really speak to it. It's called Icon, EIKON. That's another financial market database. So these market databases are going to give you coverage of the overall spectrum of listed companies, and for each company you're looking at, you'll be able to see, you know, who are the executives who have sold shares, and if they do their job well, the websites, the investor relation section of the website of said company is also going to provide that information to you, because it is one of the regulated pieces of information.
Okay, so so I'm regular Joe, and I'm in front of I'm on with my computer. I'm trying to spot low performing companies in the eyes of investors. You've pointed to two ways of doing that. The first is looking at the declining share price.
Yep.
Okay. Second is looking at companies where the management is selling the company's shares. So you directed me towards three different databases. Okay, those are two ways. Yep.
Yes, and again, using those databases that I mentioned earlier, what could be interesting also to look at is we talked about in a prior conversation. We talked about the sell side and the buy side analyst. The sell side analysts are the ones who write the reports and usually are the ones that you hear asking questions on the earnings call. These are people who, at the end of each report, write a recommendation on the share itself. The firms use different names, but broadly, you can all summarize them into buy shares, hold shares, or sell shares. Some people call it outperform, other call it neutral, other call it downgrade, whatever. But the general gist of it is they can either recommend that you buy more, that you hold whatever you have, or you sell what you have. Okay. Now, even for a very good company, you might always have a sell recommendation. So having a sell recommendation in and out of itself is not a problem. But what is interesting is whether, you know, let's say you have a population of 20 analysts providing their scorecard, and 20 analysts are going to give you either a buy, hold, or sell, or equivalent language. If that breakdown changes over time significantly towards more hold or problematically more sell, and mind you, you can always have a sell even in a very good company. So, but if that breakdown really changes over time, then that is an indication that there is less comfort within the sell side analysts who know the company pretty well because they interact at least once a quarter with management and always listen in and always have the opportunity to ask questions to management, that, you know, they might feel that things are not working out as well as they should. So for example, you know, if you have a population of 20 analysts and, you know, 70% say buy, 20% say hold, and 10% say sell, and in the next quarter, you'll only find 45% saying buy, and you have more people going on hold, and maybe a few people moving to sell, that is indicative of quite a significant trend change that you might want to investigate. And
Okay.
this is also publicly available. Some companies do provide that breakdown directly on their website. Alternatively, the best way is going to be to use those three databases I mentioned earlier.
Okay. So great. So what's important here is the change over time
Yeah,
in whether sell side analysts are recommending to sell, buy, or hold. And if it's
correct.
a general move towards selling and holding as opposed to buying, then this would be, to put it in your own words, indicative of the fact that this company is failing in the eyes of investors. Is that correct?
Uh, yes, but it doesn't give you the actual reasons why necessarily.
Right.
So
Yeah, yeah, I get that.
further,
Yeah.
yeah,
These are statistics. These are
yeah,
statistics.
just
And
just indicate, yeah, indicators that would be accessible to
yeah, I get
almost
it. The
everyone.
regular
Yeah,
Joe. Yeah. And regular Joe gets on NASDAQ IR or Bloomberg Terminal and Icon, one of these three databases, to get this information. Is that correct?
they can. Yes, it's not necessarily super cheap, but you can. Yes.
Now, I don't mean to ask you a tricky question, but is that information available on the cheaper version called Seeking Alpha?
Seeking Alpha is indeed a very interesting outlet with a lot of so I think it do portrays itself as trying to be more helpful to non-investment firm type of investors. So to the retail investor mostly. I think it does an excellent job at that. Um, but it's going to be more focused on the US market.
Okay. Right, that's correct. But okay, great. So at this point, we've found three different ways of assessing whether a company is failing in the eyes of
Yep.
investors.
So
So
another
that's
one,
already really good.
yeah,
Is there anything else?
yeah. I think I can we can go through another three potentially.
Okay.
The next one that we can talk about is going to be the any downgrades by rating agencies if they hold public debt. If the companies hold public debt, obviously you're going to want to look at whether or not the rating agencies such as Standard and Poor's or Moody's or Fitch or AM Best, depending on the industry, um, have downgraded the outlook for the company. They have a complete different view than investors, but yet it is another indicator
Okay,
that things might.
yeah. So I'm sorry, the names, Standard and Poor's.
Yeah, these are rating agencies: Standard and Poor's,
Yep.
Moody's,
Moody.
Fitch, yeah,
Okay. Yeah, Fitch.
uh, Fitch, and AM Best for insurance companies or some financial services. Um,
Okay.
so that's going to be another one.
So these
Um,
people will say whether they think the debt of a company is sustainable. And they will say
yes.
that by means of a rating, a kind of debt rating. Is that correct?
Yep.
Okay. And so you're saying that if regular Joe wants to figure out whether a company is failing in the eye of investors, he might also look at rating agencies and look at the companies who have seen their rating be downgraded from, for
Correct.
example, A to B. I mean, I know there are multiple letters. It's triple A, and triple B, and all
Yeah.
that. But yeah, okay.
Correct. What you want to look for is obviously the direction of the downgrades.
Again, so it's
Um,
direction. Yeah,
yeah, it's direction. Having said that, I maybe want to suggest to put a bar at around triple B.
yeah,
Anything below triple B might become, a
risky.
tad more problematic. Yes, because you fall somewhere in the below investment grade type of rating, which might be for a very technical reason. It's only momentary, or you know, uh, is indicative of another type of weakness.
Great. So we found four reasons,
Yep.
four ways
So
for regular Joe to figure out whether a company is failing in the eyes of investors. And you mentioned, before mentioning
yeah,
reason number four,
possibly
you said
another
there are two
two.
more. I'm sorry,
Yeah.
what?
So the next one we talked about earlier, which is any increase in activist behavior
Okay.
by shareholders. Okay. So we talked about some examples earlier, but I guess what is interesting is
And wait, how would we get a consolidated? Because one of the hard things about all this is the amount of information.
mhm.
And so how do we get a consolidated view of an increase in activist behavior in all these
Yes.
companies that are being traded?
Right. So what you will do, so you have different ways to skin the cat. But the most obvious way is likely you have a company that you've got in mind. Okay.
Okay. Okay.
And either the company provides all that information itself, and that's going to depend on whether or not the there's more disclosures in some countries than others. Okay, so that's why it might not be immediately recognizable in some European legislations versus the US. But that's why I suggest that some of those investor relation databases, which for company X are going to provide you with that information.
Okay.
So when you have because for example in the US, the moment investors own more than 5% of shares, they
Yep.
have to file separately. And more specifically, if they have the intention of influencing control in
Yeah.
that company and they are above 5%, they are forced to issue a very specific schedule to the SEC. Okay,
Okay.
technically it's a Schedule 13D.
Okay.
Now, that is an item that is going to tick a box in one of those financial, investor relations databases. So you'll be seeing that, hey, whoops, all of a sudden you've got an activist showing up.
Right. Okay. Perfect.
In EU markets, notably in France, you don't have exactly the same. So in France, you'll have a statement of intent that is required to be filed after triggering certain ownership thresholds that can go all the way up to, so they go 5, 10, and 15%, if I'm not mistaken. But the point is, the information is accessible. So the best bet is to look at those investor relation databases.
Okay.
And
And
lastly,
so, yep, go ahead. So what's the last way for regular Joe to figure out which companies are failing in the eyes of investors?
yeah, lastly, the one that you want to be looking for is going to be sizable increases of short selling activity. So this is a very technical item, but hopefully I
So
can explain
let's
it
begin with the word. What is short selling?
So short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back later for less money.
Right.
So you are betting
On a company's decreasing share
exactly
price.
and want to make a profit out of that.
Right. So
So
in a sense,
again,
it's selling
yeah,
something that you don't have. Is that correct?
yes.
Okay.
It is, this is something that is usual. So every company is likely to always have a small, amount of short selling happening. But if all of a sudden you see that there's a sizable increase of that, then it's another indicator to look for when determining, whether or not there are potential issues in within the company.
Cool.
Now, short selling is regulated both in the US as well as the EU. So all of this information must be disclosed under slightly different different rules. Sorry.
Yep. And would
But
one find this information on the three terminals you mentioned
yes,
earlier?
Well, I can speak to two of them absolutely. Icon I haven't used at all yet, so I can't speak to. But I wouldn't be surprised if they don't.
And does I'm Bloomberg Terminal, I believe, covers U.S. markets and European markets. Is that the case also
Correct.
for Nasdaq?
Yes, yes. It's called
Okay.
yeah. It used to be Thomson Reuters. It changed name to Nasdaq
Oh,
IR. But
oh,
yeah,
okay. Okay, great. All right. Well, look, we've had a really rich conversation. Thanks again. I mean, we've spoken 3 times, and I hope that our viewers will appreciate everything you shared and everything we talked about. If I have any follow-up questions, I'll take the liberty of pinging you or sending you an email. And if any viewers would like to send you a question, perhaps they can leave a comment on my blog, and I'll forward their question on to you. So
sure. No, it was. Thanks for having me. It was a pleasure. I enjoyed all of your questions, and hope I've been able to clarify some of these points. I think it's a fascinating world that I really enjoy a lot. So I hope I've been able to convey some of that.
yeah, well, thank you very much, and hope to see you soon.
Okay, thanks a lot, Guillaume. Take care and have a great rest of the day.
Yeah,
Speak
you
soon.
too. Bye bye.